Hello friends, welcome you all. Today we are going to study the distribution channels in bank assurance. In the first part, we are going to study some distribution channels, some ways of selling bank assurance. And in the next part, we will continue with these distribution channels because it is not possible to discuss in only one lecture. Uh, One of the most important change which is happened recently in financial sector, that is the development of bank assurance. And banks and financial institutions also find it very important things to generate the revenue, and very important model of business, that is bank assurance. And banks are taking the benefit of this new financial engineering in the financial sector. So let us discuss what are the distribution channels of bank assurance. Banking institutions and insurance companies have found that bank assurance, it is attractive and profitable complement to their existing activities also. And distribution is the key issue in bank assurance and is closely linked to the regulatory climate of the country, and the success which is demonstrated by various bank assurance operations, particularly in Europe, have triggered the mergers and acquisitions across continents, and efforts are on to replicate the early success of bank assurance in other part of the world as well. Over the years, regulatory barriers between banking and insurance have diminished and has created a climate increasingly friendly to the bank assurance. For example, in India, there were some limitations of there were some limitations for bank to work for different insurance companies. They can only sell limited products, and the banks could sell only limited plans also, and they could only tie up with the few banks, particularly one bank. So in the open architecture of bank assurance, the limitations of this tie-up and selling few products is diminished. And in world also, the regulatory barriers between banking and insurance have diminished over the time, and it created a climate increasingly friendly to the bank assurance. In the passage of Graham-Leach-Bailey Act of 1999 in US, and Insurance Regulatory and Development Authority Bill in India in 2000 have stimulated the growth of bank assurance by allowing use of multiple distribution channels by banks and insurance companies. Bank assurance experience in Europe as well as in other selected countries offers valuable guidance for those interested in insurance distribution through the banking channel in the developing market also. So Europe is the first who given the guidelines to the developing countries what will happen, and how the bank assurance runs. It goes on. Many banks and insurers are looking with great interest at building new revenue through bank assurance, including large traditional companies that would not have considered such an approach about a decade ago. Of particular interest, many believe is the potential for bank assurance in developing economies such as those of Latin America and Southeast Asia, etc. Now let us come to the point that what are the distribution channels in bank assurance. Traditionally, insurance products have been promoted and sold principally through agency insurance agent system in most of the countries. With new development in consumer behavior, evolution of technology, and deregulation of financial sector, insurance sector, banking sector, new distribution channels have been developed successfully and rapidly in recent years. In bank assurance make use of various distribution channels such as career agents. One by one, we are going to discuss in the coming slides. Career agents are there, special advisors are there, salaried agents, bank employees, platform banking it is called generally. Corporate agencies are there, brokerage firms are there, direct response, internet, e-brokerage, and outside lead generating techniques. So these are all channels we are going to discuss and study one by one. Some of them we are going to study in this lecture, and in the next part we are going to study remaining distribution channels. So let us start with the career agents. What are the career agents? Career agents are full-time commissioned self personnel holding an agency contract. They are generally considered to be independent contractors. Consequently, an insurance company can exercise control only over the activities of the agent which are specified in his contract. Despite this limitation on control, career agents with suitable training, supervision, and motivation can be highly productive and cost effective also. Moreover, their level of customer service is usually very high due to the renewal commission, policy persistency bonuses, and other customer service related award paid to them. Many bank assurers, however, avoid this channel, believing that agents might oversell out of their interest in quantity and not quality. Such problems with career agents usually arise not due to the nature of this channel, but rather due to the use of improperly designed remuneration and or incentive packages also. So banking channel should think over this, because the problem is in the remuneration and incentive packages. Next distribution channel is special advisors. Special advisors are highly trained employees, usually belonging to the insurance partner who distribute insurance products to the bank's corporate clients. Banks refer complex insurance requirement to these advisors. The clients mostly include affluent population who require personalized and high quality service. Usually, special advisors are paid on a salary basis and they receive incentives, compensation based on their sell. Next distribution channel or the way is salaried agents. Having salaried agents has the advantage of them being fully under the control and supervision of bank assurers. Here there is no problem such as career agents like remuneration problem, incentives, etc. These agents share the mission and objectives of the bank assurers. Salaried agents in bank assurance are similar to their counterparts in traditional insurance companies and have the same characteristics as career agents. The only difference in terms of their remuneration is that they are paid on a salary basis and career agents receive incentives, compensation based on their sell. So here is the career agents gets the inspiration, or what we can say that incentives, or they get encouraged by the commission which they will get. And here those who getting salary, they don't have that much incentive to sell the products because they are getting the salary. So this can happen here. Some bank assurers concerned at the bad publicity which they have received as a result of their career agents concentrating heavily on sales at the expense of customer service. and have changed their sales force to the salaried agent status. Next is platform banker. Platform bankers are bank employees who spot the leads in the banks and gently suggest the customer to walk over and speak with appropriate representative within the bank. So platform bankers are particularly they are bank employees, and those who in the need of bank assurance, or those who want to purchase insurance from the banking channel, they just suggest them to meet some representative and appropriate representative advisor, insurance advisor, who are within the same bank or within the those who associated with the bank. The platform banker may be a tailor or a personal loan assistant, and the representative being referred to may be trained bank employee or a representative from the partner insurance company. So partner insurance company's advisor or personal assistant or representative also can be there in the bank, or and the representative of the partner insurance company can also talk over the telephone or through the other modes and assist the um, those who want to purchase insurance with the bank. Platform bankers can usually sell simple products. However, the time which they can devote to insurance sale is limited due to limited opening hours and to the need to perform other banking duties. Further restrictions on the effectiveness of bank employees in generating insurance business is that they have a limited target market, those customers who actually visit the branch during the opening hours. So there is the restrictions of the effectiveness of bank employees, because um, after the banking hours they cannot work, but if we consider the salaried agents or career agents, they can work after working hours also. So they have the limited target market and compared to others. So this is the restrictions for the platform bankers. In many setups, the bank employees are assisted by bank's financial advisors also. In both cases, the bank employees establish the contact to the client and usually sells the simple products, whilst the more affluent clients are attended by the financial advisors of the bank, uh, which are in a position to sell the more complex products. So this structure is also there, that is the simple those products who are in the understanding capacity of the employees, so they can advise simple product to the customers. But in case if any complex product is there, then they can and they refer that customer to the special financial advisor of the bank, and the special financial advisor can sell the more complex products. The financial advisor either sell in the branch, but some banks have also established mobile sales forces also. So bank also taking the help of technology, they can use the mobile communication between financial advisor and customer also. So there is no need to sit in the branch and give the advice to the customers. So bank can appoint a financial advisor who can advise on the telephone or through other modes also. If bank employees only act as a passive insurance sales staffs, that is, they do not actively generate leads, then the bank assurer's potential can be severely impeded. So Here bank employees should be active. If they do not act as a active, or they act as a passive, then the potential of bank assurers can be affected. However, the if bank employees are used as active centers of influence to refer warm leads to salaried agents, career agents, or special advisors, production volume can be very high and profitable to the bank assurers. So here, if bank employees should be active one, and they refer, that is the salaried agent, career agents, and special advisors, and they can have the impact on the production volumes if they are active. In So we have discussed this. I have taken the references from this site and this article and prepared this presentation. Thanks for this writer of this article, and thanks for this website. Friends, that is from my presentation today. Thanks for watching. If you have any problem, doubt, or anything, you can write, call, and message me. Write your name in the comment box. Thanks for watching. See you in the next lecture. Bye bye.